Good morning, everyone. This is Daily Trading Analysis with the weekly recap of this week, which has been better than I expected. We are still in range, in balance, below 4% of all-time highs, despite the bad news for the inflationary pressures, for the tensions between China and US, coming from also bad tensions of Elon Musk and Trump fighting in social media. We had even worse economic data this week. So there's a lot of things going on and the market is still trying to go higher. It's quite surprising how investors and big money is still pouring in, sustaining this move. So let's analyze why is this happening. First, we are going to review the economic data. On one hand, as I said, there are encouraging signs from the US-China trade front. We had our issues with the communications, with the conversations between both governments, but now, today, yesterday afternoon, it was announced that there's a planned meeting in London with US and China trying to have a deal for rare earth export licenses to US automakers. That is going to be super interesting because right now there's a curve in these exports and which is affecting really badly all these automakers in the US. Additionally, as I said, these economic data are quite encouraging. The recent US labor market data presented a mixed picture. We got US Nonfarm payrolls that came in at 139,000, which is basically less than expected. Less than the previous one, but more than expected. It's one of the few stronger than expected job creations that support economic growth. But on the other hand, we have mixed employment data that makes the future super uncertain. Initial jobless claims came in at 247,000, higher than expected, which is positive to counterbalance this increase in wage pressures. But as you can see, there's a lot of negativity, a lot of negative data coming in. We have average earnings, which are higher than expected, wage growth. We have services price paid at 68.7. Sustained price pressures. We have services also on the PMI below contraction, which is neutral, but services in the S&P is still at 53, which is showing stronger services activity, resilient demand. People are still paying these prices. Then we had jolts coming in higher than expected. So basically, we had this unexpected rise in job openings, in jobless claims, in services price paid. There's, a lot of bad news coming in. But there's persistent inflationary pressures also coming in from the Federal Reserve. We got our decent news on the economic front, most probably from the NFP, job creation, but this is counterbalanced by the cautious stand from the Federal Reserve. Average hour earnings in the US rose 3.9%, as we can see up here. Year over year, matching the previous reading. Similarly, on a 1 month over month basis, the wage growth also surprised to the upside. All these factors are without doubt giving the Fed the pause signal. And that's why more and more we are going to see on the charts that investors and analysts are pricing in less and less probability of rate cuts this year. The economy is strong, and that's really bad for inflation. Several Fed officials have recently expressed concerns about inflation risks and uncertainty stemming from mostly on trade policies. Goldsby suggested that the recent PCE inflation that we got last week may have been the last vestige of pre-tariff impact, and future inflation readings could be even higher. There's a lot of cautious commentary from the Fed, and this is certainly impacting the sentiment, even though Trump is requesting again 100 basis points, 1 full percentage of rate cuts. Wow. So we have all this in the economic front. In terms of earnings, we got Broadcom and AVGO with positive earnings. This is linked with the AI semiconductor sector, so this is pushing AI again higher. So let's move into the charts to see how is this all affecting the markets and the sentiment. And as you can see down here, we have the volume on the left side, and the advanced decliners on the right side. This is for the ES. As you can see, we got pretty bullish inflows on Tuesday and Friday. And these are not light. These are pretty heavy, 300 million on the volume. The advanced decliners were mostly positive on the higher end, so the ES is really pushing higher. ES, it's only 3.80% from all-time highs. And as you can see, this Friday was really pushing prices higher. Then, if we move to the Qs, we can see similar trend. And look at these advanced decliners on Friday. This was really good. So big money, it's still entering the market. And we cannot ignore this. In terms of internals, in terms of market internals, things are looking quite bullish, right? And we have on the daily chart, we are in the middle of an inverse fair value gap, which we touch 1 time, 2 times, 3 times, and we closed higher of the consequent encroachment. We are at 4% of all-time highs. We are so near that I wouldn't be surprised if we continue grinding in. But what I expect is to get rid of all these people and do this and then this. That would be the typical Wall Street move to reach all-time highs after a manipulation move to the lows, to get rid of all these longs and then push higher with a good catalyst to all-time highs. That would be insane. What is true is that the market is stronger than I expected, and we have to recognize that. In terms of 1 hour, we got our Thursday of pullback, but I mean, the market is super volatile. It's still grinding in. As I said, we got our really bad move, but then we bounced from this 1 hour and we are pushing higher, getting rid of this buy side liquidity and still pushing higher. So who is doing this? Well, Tesla is trying to sustain, to live to this storm of Trump versus Musk, but I mean it's still there. Amazon 2.72%. Wow. Consumer discretionary XLY was 130 on Friday. So this is looking pretty good. It's still sustained. Who else? Google, AI. Nvidia, AI. Look at Nvidia. Nvidia is just saying, I don't care. Nvidia is pushing this market. AI is staying in this market. Meta, 1.91. Look at this. Apple, 1.64. Apple is not looking super good in terms of daily, but long term, Apple has a lot of range for investors. Microsoft, all-time highs. So these are the companies that are sustaining the NQ. What else? We have RSP mitigating a little bit of momentum, but things that I always like to see. Look at the trend. The trend is being established on the 50-day moving average. 73%, more than 70% of stocks are above the 50. This looks really bullish. In terms of the 200, only 43, so we have range for investors to come in if they find it with a good catalyst for them to be confident. There's a lot of growth to be made. And as I said, yields are looking pretty bad. The July one, it's pushing higher. It's at 4.13. This is one rate cut. And in terms of the rest of the year, we can see for sure. Let me check December. So if we check December and we calculate the inverse, we can see 3.93, but it's still pushing higher. 3.93 means the second cut in December. This is what they are expecting, what the bonds market is pricing in. UK, it's also near all-time highs. Russell, it's in the middle, but there's a lot of growth to be made. So there's, in terms of, look at financials, all in the green. Financials are looking strong. Everything, it's near all-time highs. Why is this happening when we have so many issues in the US? That's a question for you. But what I would do is the following. We are more and more seeing bullish signals in this market. But don't get me wrong, the fundamentals are still quite uncertain. If you are a big investor, you are waiting for the final pullback to go all in for all-time highs. That's what I will do. And certainly, I've seen that in the past. We saw that in here with this manipulation move and then grind higher. Wall Street wants to get rid of other competition. If there are longs right now, they will not push all-time highs unless there's a big catalyst, of course. But if we are grinding like this, I wouldn't be surprised if they manipulate to the downside and then go straight to all-time highs when they find the best catalyst. So why I'm saying this is because be careful with the volatility. Be careful with what you expect. Expect the unexpected always. And my best recommendation is for you to be smart, be disciplined, be patient for that move in which you think, okay, this is the move. Despite the fact that this looks good, this is not the way we should go to all-time highs. A slow grind of shorts, I don't know. I would like this kind of move. This, then a little bit of pullback, and then pushing higher. So what I would like the Nasdaq to do is to pull back a bit. I would like to revisit this daily bullish fair value gap and then manipulate, do a second one, and then go straight to all-time highs to 23,000. So we will see what happens. There's a lot of things going on, and we have to slowly but surely go through all the issues: Trump versus Musk, China, US, inflationary pressures, trade policies, all these. But AI is looking strong. And that's all from my side. As always, Thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this every single Saturday. So stay tuned for more videos. If you are new, welcome to the channel. I do this mostly for you. Have a nice weekend. Try to disconnect a bit and let's come back in fresh on Monday. Take care.